All right, let's do this.
Let's do it.
What's up, Gus? How are you?
Good, man. How are you?
I'm doing good. Glad that we're doing our first video podcast here for Milestone Mortgage. Make your milestone. So we're gonna share some stories of who we are, why we do the crazy stuff that we do, in talking about inflation in particular. And for me, for example, I moved here in '96 from Brazil.
Yeah, tell us that story about how
Yeah,
you
no,
got into
it
this
kind of
all too.
ties a lot with what's going on right now. So I grew up in the early '90s in Brazil, when the president confiscated everybody's money in an attempt to control inflation. Back then, the inflation was completely out of control at 85% a month in Brazil. So if you don't have your money in the bank, if you don't have your money in dollars, if you don't have your money in some kind of currency that doesn't depreciate, your money will be wiped out completely. And growing up in Brazil in 1990, I was 15. We moved here in '94, but between '90 and '94, it was when it got really bad, the economy. My mom was a real estate agent, so I grew up going to open houses and dealing with all the stuff that we deal with today as a realtor. But whenever the president confiscated everybody's money, think about that. For example, if you're a real estate agent and all your clients' money is confiscated, so that means there's zero sales, right? Like nothing is happening, everything is frozen. My mom had the vision and the foresight. She was like, I got to do something about this. I got to feed my family. How do I do this? So she got together with 15 agents that they're her closest friends in the office that she worked with, and she got $5 here and there for everybody to cook at our house. So that way she could help them not spend money eating out all the time, and then she guaranteed that we had something to eat. So for a long period of time, I had 15 people coming to my house every day for lunch. It was weird. It was a very weird time, and this that stuff is ingrained in my brain growing up. Growing up with uncertainty, growing up with fear of not knowing what's going to happen financially. But my hero is my mom. She's always a soldier. She's the reason why I'm here today. She was always my motivator and my I'll call her my superhero mom. She had the ability to see that happening, help her friends, and help her family. Um, Very, very, very unstable financially. Growing up in Brazil it was kind of weird. So that stuff. That's why I'm an ambitious person. That's why I'm financially responsible. That's why finance is so important to me. Whenever we had some drama in the office last year, one of the things people said is like, it's never good enough. When is it good enough? For me, good enough, we're still far away from good enough. But good enough is when you're financially free, when you're financially independent, when my kids don't have to worry about what's going to happen next month. So, growing up and you have those things, those events that happen, and you have some things that happen. I lost my father when I was 18. You lost your mom. We share some of those pains, and those things carry on in our adulthood, and really affects how we do business and
Yeah.
how we think every day.
No, I agree. I think it's amazing how sometimes traumas and things that just happen to you out of nowhere completely rewire your mindset into setting an amazing goal and putting yourself on a track to try to achieve that goal. In a sense, I have similar experiences. I come from Lebanon as well, and that's a country that's always been unstable for for centuries.
Yeah.
It's a country that always gets involved in wars that is not part of, and just like in Brazil they locked up people's money
Yeah.
and completely canceled bank accounts and they just stole all the money. The
Yeah, that
same
just
thing kind
happened
of
in
happened in
Lebanon
Lebanon as
last year,
well
right?
too.
Yeah.
Yeah, and it's been the same, and they haven't released people's money, so the country went into a full cash country. And now, fortunately for me, I wasn't living there when that happened, but I've seen similar things happen, to my parents in the past, where you know, in Kuwait, whenever Desert Storm happened, whenever the war happened back then, my parents lost everything as well. So my mindset has changed me to creating. Obviously, you have to save a little bit of money to make sure you don't get in a bind in case things go completely away. But I try to spend a lot of it because I'm afraid of losing it and not have the opportunity to actually enjoy it. So my mindset is that way. But then again, I also don't have children yet, so
Yeah.
I don't
Yeah.
think about them yet.
Yeah. I know that's coming, right?
Yeah,
Yeah.
maybe.
So I have five, and yeah, that's a big factor. And two are in college, one is on his way in high school, and two little ones. So super important for me. It's to being financially responsible is super, super important. And that's kind of why I want to share some of the information, some of the people that are watching us, some of the clients that we share that. I really want to share like a finance 101 for high school students where they can come to the office and learn from us.
It's a good
And what
idea.
we do for a living, we really analyze people's income and look at budget. And people's like, how much should my note be based on my income? Sharing these little tips because I think it's so important. And the earlier you learn how to save money, the better you're going to be financially, right?
Absolutely.
Um, Being financially independent and financially responsible and financially free, it's one less. It's probably is the biggest cause of divorce, right?
Hmm.
So not having to worry about that, I think is huge. And if we can share any tips to help one person, it'll be awesome.
Yeah, yeah, no, definitely, I agree. I think, especially now with things being as unaffordable as they are, it'd be important for us to, educate whoever's listening to us how to set themselves up for whenever things do turn and become affordable again. Because everything that goes up goes down, and
Right.
vice versa. So I think we're about to get into a really amazing time in our generation to be able to set up ourselves for the next wealth jump that's going to happen in
Right.
this world. So yeah, we can jump into
No,
that.
I think it's a great topic for us. For me, it ties back to growing up and everything. And in my family, I'm the guy that has the opportunity to make my family financially independent, and I'm running with it. And there's nothing's gonna stop me. It's gonna happen. So one of the things I wanted to talk about is like follow my favorite coach of all time is Chad Lubin from the core training. He was the financial whiz. He gets together with his family once a month and goes over his financial budget. He believes in living in thirds. So one third is expenses, one third is taxes. Unfortunately, we have to pay taxes, and the other third would be savings and donating. So it takes a while to be able to do that, and depending on how much money you make, of course, you can save 30% of your income, or 20% of your income, or even 10% of your income. But it's more of an exercise where you can save before you spend. So he taught us how to do this buckets. Like a checking account. So he has multiple accounts set up. So he has multiple accounts set up where the income comes in here and the expenses come out of a different account.
Mhm.
Almost like a funnel. So when this bucket fills up, it goes into the savings. This is the savings bucket, and then it flows into your expense bucket. But
Mhm.
first, you fill the savings bucket. So if you're making $5,000 a month, you would save 20%. So you have to save $1,000 a month. If you save before you spend, you don't. The money's not sitting in your checking account. If you have when you get a few good checks, you have some money sitting in a checking account. I know I start spending right away. I start thinking, hey, I'm going to buy this. I'm going to buy a new watch, which I love. Or travel. I know we
Mhm.
share this passion for traveling too, or cars. Since I'm a kid, I always had a Lamborghini poster on the wall. I always wanted to drive a Lambo, a Porsche.
Yeah.
So it doesn't take much to go all out and spend the money. But if you can save first, you save for a rainy day. And nowadays with all this financial uncertainty, I think it's super important to have that.
Mhm.
So people need to have at least 6 months reserves of their mortgage payment for people that pay, or rent payment for that matter. You got to have 6 months reserves in case something happens, in case you get sick. I mean, look at what happened with COVID. Like
Mhm.
people are sick for a long time, but having that rainy day fund before you spend the money, before you go decorate your house, before you go buy a new car, it's super important.
Yeah, absolutely. And I think when it comes to that, obviously 6 to 9 months of reserves are super important to have. Try to not tap into that. Leave
Yeah.
that for a pure rainy day. And in case a hardship comes, I don't think you should worry too much about what am I going to do, what I'm going to
Mhm.
do. Just keep your head up and just pick
Mhm.
up and try to figure it out. That's important. Like whenever you go into a full panic and just start tapping into your savings and depleting those reserves, you're gonna put yourself in a bind again, and you're gonna become afraid of doing certain things in life. It's as equal as important as it is, in my opinion, to save a little bit of money is to create experiences, especially with your family,
Mhm.
with the people that you love. Because if you lose that, you're not really gonna have anything to hang on to. Because a hardship financially is probably gonna happen, but
Mhm.
what keeps the family together is the memories that you create. I
I agree.
think I think you go back to that and you remember why you are where you are in the
Mhm.
first place. If you
Yeah.
didn't have those memories, then you don't
Mhm.
really have the foundation of creating the money. The money's going to come and go.
Yeah.
You know?
Yeah. God forbid something happens. You're not taking anything with you, So
Exactly.
all you're going to
At
have
the
is
end of the day.
experiences.
Exactly. You're not going to buy yourself, a VIP ticket to heaven or hell, wherever you decide to go.
Right. No, it's true. I told my wife, she was able to go visit her dad for his 60th birthday. It was a surprise. So
Yeah.
her and Belle went there, and how awesome was to be able to do something like that. He had no idea, by the way. She showed up, and she hasn't seen him in a while. And when that happened, I told her, I said, look, I'm a big soccer fanatic from day one. Lost my dad when I was 18. So part of my memories growing up, are the experiences. I don't remember a gift that I got in any time, any age. I don't remember any of that, but I remember the trips. I remember the experiences. One of the big ones was going to the soccer field with my dad, and my team made it to the final. We were really good back in the day before I moved here in '94. We went through a rough time, but we finally made it to the final, and I was able to bring Leo with me. He's turning 7 this month, and it was amazing to share this experience with him. Carrying him on my shoulders like my dad used to do on the field.
Yeah, and he'll never ever forget.
He'll
that.
never
And
forget that.
Maybe
Yeah.
40 years.
He
from
will
now,
never
he's gonna
remember what
talk
he
about
got
it.
for Christmas, but he'll never forget the trip we took and watched São Paulo win the final,
Yeah.
beating the Flamengo, which is a big team in Brazil right now. So we just did that a few weeks ago. So I'm a true believer in experiences, but you have to do both, right? You have to be financially responsible, but then remember that we're not here forever.
Correct.
We have a good 70 years here. I'm 48, so I'm more than halfway in. So I gotta have experiences and share that with my family.
Yeah. Yeah. And I think
you
it's
travel
important.
a lot. So you just
Yeah.
came back from Burning Man, and you had some awesome trips with your wife. And
Yeah, this summer has been crazy. I mean, I honestly took advantage of a slow market that we're in. Look, I do have the time now. I'm not. I can either sit in my office and stress about where I'm going to generate business, what I'm going to do, or I can take advantage of this time. I know the business will come. It'll come back. I did save a little bit of money whenever things were good. So I figured, let's do it. Let's just go travel as much as we possibly can this summer. And I think, out of 4 months, I was out of the country, maybe 3, between all the different places. And with my job, I'm still able to manage.
yeah, that's what I was gonna
the
say. With
certain
our job,
clients
we
and
can,
whatnot.
you gotta answer the phone whether
Mhm.
you're in Egypt or in,
Yeah.
in California. You can just answer your phone.
I remember I was actually working with a client when I was sitting on a hot air balloon in Turkey. And it was just like, as a service, do I have service? And I did have service on a hot air balloon. And they're sitting at the closing table. It was amazing.
That's awesome.
Actually, it was really funny. The realtor was so amazed by it, my referral partner. And, she started raving about, man, this guy picks up the phone even whenever he's on a hot air balloon living his best life.
Yeah, what's up with us going on vacation and our phones blowing up? It's crazy how that happens. Every time, hey, I'm going on vacation, then everybody start calling.
I
It's
feel like nobody wants you to have fun.
Yeah.
But and I'm actually making that, kind of my mantra in a sense where if business is slow, I'm just going to travel and someone will call.
Yeah. It's almost like we need to go on vacation more often so we get busier. Yeah.
No doubt. No doubt.
You get 3, 4, 5 loans every Friday you're leaving on vacation.
Yeah, no, look, we're definitely blessed. I'm very, very blessed to be doing what I'm doing. For the path that got me to where I am, I'm very, very blessed with that. Very happy that I'm excited about what's to come still. I've only been doing this for 6 years now, so there's a lot of road to go.
6 years already. That's crazy. Yeah. It wasn't that long ago. I was a new guy in the mortgage business.
Yeah.
I was talking to a realtor at my mom's house yesterday. He's like, remember when you started back in 2001? I got a call yesterday from my first boss, or second boss in the mortgage business. And I'm doing a loan for him, back in 2003. Golly, it's been 21 years, 22 years now that I'm in the business. So no longer the new guy with all this gray hair here.
This happened over 2 years for me.
Is that what happened? Mortgage business.
2 years, mortgage business. That's mortgage grace.
Yeah, definitely.
But a second thing that I'd like to, tell people about is, while you're not buying a house right now, if you have issues with your credit in America, I think the most important thing you can ever have is good credit score. With good credit, you can get anything at a lower interest, at a more affordable way. You get a lot more benefits whenever you have, a better credit score. So if you're on the fence or waiting a little bit, a few months, work on your credit. I know us as mortgage lenders, we can definitely give you a lot of advice. Now, we're not credit professionals. That's not our job, but we look at enough credit, and we know what to tell you what to do in order to be able to get it to a point where things get so much easier for you to buy a house whenever things get easier.
No, I agree. I think it's really rewarding when our clients listen to us and they use, they take advantage of our experience and the knowledge in the in the credit world, right? What does it take to have good credit? How much do I owe on my credit cards? Am I paying my bills on time? And the difference that it makes on a rate and the payment. Very rewarding when they listen and then they come back to you and say, hey, by the way, you gave me those tips. They really made a difference for me. Now I qualify, and now I qualify for a better rate. I think that's one of the coolest things, in our business. Really rewarding when they listen to us and become homeowners. And then they come back a few years later and they have a ton of equity. I love that when I get a call like 5-7 years later, and they're like, "Remember that house I bought for 200,000? Now it's worth 300,000." And how I'm putting 150 grand down on my first house, on my second house, when they did 100% financing on the first one. That is awesome. I love those stories, and it's happening quite often now that I've been in business for so long.
Hmm.
Now I'm doing loans for some of my clients' kids now,
Yeah.
which is crazy. But when they listen and they're paying attention, investing in real estate is one of the most rewarding places to invest the money. I believe in investing in the stock market and real estate, and having a little bit of both. Or first in real estate, then in the stock market later. But
I think that's the easiest way to grow wealth is in
Mhm.
real estate, because it's really a double-edged sword.
Mhm.
You're building equity, you're not paying somebody else's rent.
Yeah.
And at the same time, your property and value is appreciating on average 3 to 5%. Now,
Mhm.
what happened, in the last year or two is an anomaly where it jumped up 20, 25%.
Yeah,
But
yeah.
that doesn't normally happen. However, we are in times where it's a good opportunity, even with the higher rate,
Mhm.
to get into this, just because you're getting concessions from sellers now with the high to make it affordable. We do have a lot of different programs and ways to try to lower the monthly payment,
Mhm.
but everything is rising and everything will come down. This hike is temporary. But when it going back to real estate, I think that is the number one way to become wealthy in this
I
country.
agree. I agree. It's for savings. You have to make that payment. Which forces you to build that equity. And then in areas that the real estate really appreciate, then you really make the money. Then you have that compound effect, right? When you buy something for 100 and it's worth 150.
And I think the greatest thing that not many people talk about is if you do have a house and it does appreciate, let's say it appreciates $500,000.
Mhm.
You're living in a house for 2 years, you don't have to pay taxes on that appreciation.
Right.
Where
Right.
can you do that? In the stock market, you're paying probably half of that in taxes if you take it out,
Yeah.
not in real estate.
Yeah, it's one of the few places you have some tax free money still, where you can cash out and not pay any taxes. If you
Yeah.
make money by selling your house, let's say you make $200,000 in equity, right? Like you sold it, kept it for 2 years, and sold it, and got a check at the closing table for 200 grand. That's tax free money. That's the equivalent of making $400,000.
Yeah.
Working, because if you make 400,000, almost half of it's going to go to taxes and everything else. So it's a significant amount of money, and that's how most people build wealth. One of the questions that I get a lot, and it's with us coming from a 2-3% interest rate scenario, a few years ago, and me quoting last week, I quoted a 8.5% rate. People are asking me, should I still buy a house? What do you tell your clients? And what's your perspective? Because I see a lot of people saying this, or wait, or hold, or go ahead and buy it. What's your personal opinion?
I think it depends on what you're getting whenever you're buying that house. So if you absolutely if you need to buy a house, if you're paying rent, 100%. Don't rent. If you can buy a house, if you're able to buy a house right now, if you're making enough income to buy a house, you don't have a lot of other debts, I think you should buy a house now.
I agree 100%. And like if we compare buying versus renting, buying and 99% of the time wins. I
Sure.
think the only time you should rent is if you're not going to be in a job for a long time, or if you're going to move. Because if you buy a house, you got to consider the fact that you may have to hire a realtor to sell the house, and you got to pay closing costs. So if you're going to move in a year or two, then maybe it's better to rent. But if you're going to stay in a place for 3 years to 5 years or longer, then buying a house always wins. Every time, every time.
Yeah, no, I definitely agree. You're building equity, your house is appreciating, you're gonna at least keep the money that you put into the house with a down payment. And especially now in the times that we are, you're getting a lot of seller concessions to pay for the closing costs. So essentially, you're buying your house with the savings account that you have if you have to put a down payment, and you're getting that back when you sell the house. So you're
You have
moving
a
in for
friendly
free.
sellers, right? They're willing to pay the 2-1 buy down or give you money towards closing costs, or even negotiate the sales price now, which you couldn't do that a couple of
Mhm.
years ago. And then when rates come back down, you can always refinance. I always tell people, my personal tip to them, because a lot of times they're like, man, the rates are really high. Should I buy a smaller house instead of going all out and buying a house? And I was like, look, here's from my experience. And I like to tell my clients, like I'm talking to my cousin or my brother or my sister, give them the true advice from what I would do if it was me. As I look at, of course, we're looking at a debt income ratio, say, hey, your DTI is pretty good here, below 30%. You have 2 kids. You want to live close to the school that your kids are going to. Um, the best thing you can do is buy the biggest house you can afford and be comfortable. Because if you do, usually the higher price ranges appreciate more, right? So then don't buy a smaller house just because you worry about the rate or because you worry about the market. Buy the house that you need 3 to 5 years from now, and then stay in it. Because every time you sell a house, you're gonna pay a realtor commission, you gotta pay closing costs. So if you stay in it for 5, 7, 10 years, those are the clients that give me a call and say, man, I got 150, $180,000 in equity now. Now, man, you can sell that and pay off all your debt and then still put a big down payment on the next house. So the people that stay, the opposite, it would be the people that only stay in a house for 2 years and 3 years, and now their payoff it's the same, or they have to come up with money to cover the real estate commission on the sale. Those are not good scenarios. But the people that stay in and that really stay in for a long haul, they're always benefit. They're always in a good equity position in 7 years.
Sure. And look, another important point is if someone is afraid of the higher rate, they don't want to pay interest rate. Uh, One way to effectively fight that is just making extra principal payments. Your effective rate drops big time because now they're only collecting interest on a much smaller balance. So at the end of it, you're shaving off so many years from the mortgage. You're paying so much less in interest. So that's one way to fight a higher interest rate. Now, of course, only do it within affordability if you can afford that. But that's always an option to fight a higher interest rate. So if you want to buy a house, yeah, sure, you go on a 30-year mortgage, but you can put a plan where I want to pay this house off in 10. Well, now all of a sudden, let's say it's a $300,000 house, and I'm just throwing numbers here. You're probably going to save about $200,000 in interest. Lock in the house if you like it, if you need to. And it's better than paying 100% interest. That's what rent is.
Yeah, you can go to Starbucks a few less times a month, and you can save up the money. You can kind of eat a little less sushi and save $200-300 a month and pay for the difference.